Hey, what's happening, everybody? This is Eric Gaddy with Dial Into Retirement. And today I wanted to go over what an account aggregator program is. Now, if you've read my blogs in the past, there was one blog probably a year and a half ago that I did on Personal Capital. Now, Personal Capital is an account aggregator. And what that means is that you are able to connect all of your accounts into one site. And it doesn't matter where your accounts are being held. You can hold your bank accounts. You can connect the credit card accounts. You can connect your personal brokerage accounts, your IRAs, your 401ks. Pretty much that you can bring it all into one place and see all of your balances. You're also, with a lot of these programs, able to bring in other kind of debt balances. You might be able to bring in your mortgage and various other liabilities that you have. So, personal capital is one that I've liked in the past because it gives you a lot of free tools. It not only gives you some retirement planning calculators, but it also gives you a place to aggregate your accounts, and you have an app that you can pull up and see kind of your total net worth in one place, which is nice because a lot of times you figure you're dealing with a bank and then you're dealing with another bank with your credit cards. You might be dealing with another bank with your mortgage. Then you've got a 401k at work, and your wife may have a 401k at work. You have multiple brokerage accounts. And so you could have all these different accounts in various locations, and an aggregator is just going to put it in one spot. Basically, what it does is when you connect your account to the aggregator, it pulls in that balance on a nightly basis. So it gives you up-to-date numbers. With Personal Capital, I really like. Now, the problem with Personal Capital, my problem with them is they're a money manager as well. So as soon as you sign up for Personal Capital and you start putting on all your information, I think it's about $100,000. If you've got more than $100,000, they're going to start contacting you. They're going to start calling you. They're going to start emailing you about a free review. Because what are they trying to do? They're trying to get you to invest your money with them. And so it can get kind of aggravating. So that's the one thing that I have a problem with Personal Capital. But what I'm showing you here is a program that I use with my coaching and my subscription plan. And it's called eMoney. eMoney is an account aggregator. It does the same thing. It brings in all the balances from various locations. The cool part is that if you're dealing with, let's say, Merrill Lynch doesn't know that you've just connected to an aggregator. So we're just using your sign-on to retrieve your balances. It's no different than if you're pulling it up, looking at the balance. It's just you've just assigned your login to this aggregator that brings in your balance. None of the brokerage firms will know that you're doing this, aggregating it all together. So eMoney has been used by financial advisors for many years. It's a way that a financial advisor will find all of your assets. And then again, kind of like Personal Capital, hey, we see that you have a little account over at another brokerage firm. How about let's talk about that and get it moved over? So, with my coach and my subscription, as you can kind of see down here at the bottom, there are no assets under my management. So I don't manage any money. And so I'm going to walk you through and kind of show you how this aggregator looks and how it works. Now, this will be a little bit different view because you're looking at it from my standpoint. Up here, I can click on client website and I can see what you see. Katie and Tim Stevens are just a sample client. So this is, I don't know a Katie and Tim Stevens. So this is something that with the program is just a complete sample, basically to show you how this works. So as you see, when you pop on here, you can see net worth. That's an aggregate of all the accounts. You can see investments because sometimes with this net worth, you may have bank account balances. You may have CDs, or you may have checking or savings or money market. That'll fall into the net worth. Investments are going to be more at a brokerage firm. It could be you're holding money at Vanguard or Fidelity or Merrill Lynch or Ed Jones or wherever. So that could be your brokerage account. That could be your IRA accounts. And you can see kind of with the allocation here, Katie and Tim Stevens has a little over $401,000 in equities. They got some taxable bonds and they've got some cash. So as we move forward, we're going to look at the facts. With an aggregator, typically what happens is that you would be sent a questionnaire, and it's going to collect all of your information. It's going to collect, obviously, your age, your gender, your retirement age, what you're kind of shooting for, what's the life expectancy, any children. You can assign different financial priorities. So let's say Katie's is to save for college and minimizing taxes. So you can do that. You can say Tim's might be retirement planning and managing a budget. So these are just different financial priorities. What are your goals? What are your needs? And again, we're looking at some goals here. Retirements for both. They want to fund their kids' education, and they want to leave some money to their heirs. Now, don't look like they're going to leave a lot of money to their heirs, but again, this is just a sample client. So then we go through net worth. It talks about kind of checking accounts, brokerage accounts, taxable investments, all different. Any kind of real estate that's probably, you can click on it, that's probably their residence, yeah. Liabilities. You can set it up for income. You can do expenses. They'll also, with income, take into consideration Social Security. They take into consideration everything. Savings, contribution, asset allocation. Protection is going to be more insurance-oriented. Observations and next step. So the facts are the facts, basically. This is where we're collecting all the information to make this program go. And here is, you can get to some planning stages. So it'll run what's called a Monte Carlo simulator or simulation. That means they're going to calculate it over 1,000 different calculations and give you a score on your probability of success. And with that 1,000 calculation, think of it as, good times in the market, bad times in the market, really good times in the market, and really bad times in the market. I mean, they're going to calculate it and just give you kind of a projected outcome. Katie and Tim Stevens have a little bit more work to do. We like to see probability of success at least over 80%. So that's where the planning comes in. And so over here, you can do a proposed plan. So you can change some things up. You could say, what if, Katie and Tim would like to retire at age 65. Excuse me. They estimate they'll need about $200,000 in today's terms. Well, what if they continue to work till 68 and they needed $180,000 in today's term? Well, the probability jumps up quite a bit. For Eva's education, $56,000 per year is needed in 2030 to 2033 for the University of Virginia. $56,000. That's a lot of money. 39% projected success, and that's based on how much money they've already saved for Eva in her 529 plan. Now, if they were to say, okay, 56,000 needed for 2030-33 for University of Maine, Virginia campus, this is just shifting around some money. Let's say they started funding Eva's education a little bit more aggressive. That would give us some changes to projected numbers. Now, Jack is $67,000 a year. He wants to go to Drexel, or his parents at this point are saying he's going to Drexel. And so you can change that as well. So this is kind of where you play with the numbers. If you look at this column here, this 52%, that is the current situation. If you look at the recommended plan, that's where you can kind of tweak and change. And, let's say that Katie and Tim wanted to retire at 60 and they only needed $100,000 a year. That would change the numbers dramatically. So if you wanted to see kind of how that changes it up, this is where we play with the numbers. And you can do, it might not be education. You can do planning for a second home. You could change and put any sort of input in here, and it would give you the probability of success where you are now. And what it does is give you kind of an idea of what you need to change up in order to make it more of a probability of success. And then there's reports. So if you wanted to see a detailed balance sheet and you wanted to print that off, that's what it looks like. You can go up here and change some things as well. You could say, okay, let's just look at some income tax projections. You could say, what's my net worth? And you can see net worth history. So it just gives a lot of different information. Let's get back to reports. You can also, income tax, we just saw that. You can look at investments. You could click on this. And again, your investments are updated daily. So the feed is coming in from the various firms or wherever you hold your investments. So it'll break it down. And the nice thing about this is that it's aggregated to all assets. So let's say you've got, and this isn't uncommon, let's say you've got 4 different investment accounts at, let's say, 4 different locations. You may have one at the bank. You may have one at Vanguard or E-Trade. You may have one, your 401k. You may have a broker at, again, I'll use Merrill Lynch. And sometimes it's hard to wrap your head around kind of all of these different accounts and how much risk you're taking. So what this will do is bring it all together and look at it as a whole. And so you can see with all 4 accounts, let's say, that how much large cap growth do you have? How much large cap blend do you have? How much emerging markets are you in? And then there's a recommended portfolio, because in this program of this eMoney, one of the facts that we're looking for when you initially sign up is what's your risk tolerance? How much risk are you taking? What this program will do is it will aggregate all of your accounts here, and then based on how much risk you're willing to take, it'll say this is where you need to be. So, it will give us an idea of, are you taking too much risk or are you not taking enough risk? That's the nice thing about this. I don't think it'll give us any detail here, but let's check it out and see. Yeah, it just says ETF. So through my coaching, what I do for folks is that I would be able to see all your holdings. Now, I can't do anything, can't sell them. I can't make a withdrawal out of your account because your account's not held here. This is just a aggregate program that kind of mirrors your balances from other firms. But if you own Vanguard Growth, I'll be able to see that. If you own, Fidelity Magellan, I would be able to see that. I would be able to see how much you have, how many shares you've got, your market value, and everything. So it's nice from my side, if I'm coaching somebody, to be able to see that material, see those holdings and see those positions, because that's where, if I'm monitoring it, I can say, one of the things I think you should do, you're probably taking too much risk. I would get rid of that emerging markets fund and maybe replace it with this fund. So Katie and Tim, we don't have specific holdings here, but that's where it would be. I would be able to see every account, every specific holding, and make suggestions based off of that. You can also see, I don't know if it'll show anything. Normally there's a chart here. All your holdings, if it's paying dividends or income, it would show here. Account summaries. This is what they've got. So that's pretty cool. Also right here, start presenting. I can share my screen. So if I'm coaching you and we wanted to take a look at this, I can share my screen with you. You can see what I'm seeing. because again, the client side of this, your side of this, will look a little different and a little less detailed than what I'm seeing. You'll get 95% of the information though. So I can generate a download and send it to the vault. Now the vault is something that is pretty cool, that it is a secure way to share documents. So if I'm coaching you and I say, hey, I want to see your tax returns, or I want to see your estate plan, you can deposit into the vault, share it there. It's a secure place to share it. And then it will immediately be shared with me, that I can open it up and review those documents. So yeah. So this is what an account aggregator does. You can do it with Personal Capital. It has a lot of the same functions, but with Personal Capital, you're going to get hounded by Personal Capital for them to manage your money. With this, what I charge, I've got 3 different ways I use this really. With coaching, we'll use it from time to time, but a lot of times the coaching that I do will be, I'm coaching somebody, talking to them now. We're doing some basic changes in their account, and then 6 months from now, we may get back together and take a look at it. So it's just kind of on an hourly basis. On my subscription plan, what I do is I follow people every single month. I have a basic plan that is $39 a month that would give you access to this. And then I have another plan that's $99 a month, where I'll give you some investment advice, some specific investment advice. And then I have a $199 plan where I actually monitor the account. So that's where you and I are in constant contact with each other, and I'm following, monitoring, and suggesting changes. Anyway, I thought this would be kind of cool to look at, because as we go forward, technology in the investment world is going to get more and more so. And this is one of the things that, from a technology standpoint, has been great. Not only from you, just the average investor out there, to be able to aggregate all of your accounts together and see everything in one spot, but also for your advisor that's helping you manage your money. Anyway, enjoy the rest of your day and live free, my friends.